This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
To the research talks here from Stockbox with, of course, Alan Green. And Alan, apparently you've got beautiful weather in the UK, whereas I've got rain. So good for you.
It's wonderful, Mark. I'm sitting in the office looking out. It's blue sky. Actually, no, there's a cloud. Well,
it's one cloud. Oh, good.
It's a white fluffy cloud, so we don't mind those. But
No.
yeah, the weather forecast here is for a very good weekend. We've got sunshine and clouds today and tomorrow. So, but I think we're getting rain on Monday. So you'll probably get the good of that.
Yeah, I'll probably get that when we all go back to work on Monday. Yes, and I can't go out and enjoy it. But such is life. It's the way it goes. It's the way it goes. But anyway, so we're good to be catching up again. Of course, some of the things happened this week was Rick Rule's symposium over in Florida. And I know that a couple of London companies were there. I know Power Metals were there and Sovereign as well. Sapan Guy was over there as well. And from speaking to Sean from Power Metals, it seems there was quite a bit of interest actually in the Power story, which is great. And of course, they got their OTC listing. As did Guardian Metals as well, which allows the Americans to trade in that stock. And apparently someone bought shares on their phone while they were talking to Sean. So, it's good, isn't it? You can, if you can crack, as Craig Foster always says of Ondo InsurTech, if you can crack the US market, then you're doing very well. So I haven't spoken to Sapan. I don't know if you have, but I hope it went equally as well for Sovereign over there because, that's quite a well-attended event.
Indeed, well, certainly for Sean and Power Metal Resources, they've had a really strong year, and of course they still have that majority stake in Guardian Metal Resources, which is really driving their share price at the moment. But there's so much more to them. But of course, with Saban and the Sovereign Metals team, it's just absolutely flying at them. After Rio invested a further $15 million into the company, and of course that's they've taken up their share options. So of course they're basically going to run Cassia and get Cassia over the line, which is fantastic. But at the same time, they've still tapped into a very small percentage of the total potential that exists at the Cassia project, which is huge. And there's still, as we were saying, there's still every chance that Sovereign Metals could multi-bag from this point.
Indeed. Well, we did cover, I think, Sovereign last week, so we won't go over Sovereign again, but I'm sure we'll be talking about them because a lot's going to be happening over the course of the next few months with all that development going on. But not, we've also talking about this week, we're going to cover Cadence Minerals. Of course, there's a lot going on there. That's a significant project that they've got over in Brazil there. ECR Minerals and Helix Exploration, of course, a helium play. But we're going to start with Cadence Minerals, Alan. So where are we at with Cadence Minerals? What's your take on this?
Cadence, I find it baffling, frankly. They have this fantastic asset in Brazil, which has taken some years to bring to fruition. But of course, it is the Amapa iron ore mine and project, which is a former producing mine. It was valued when it was owned by Anglo American in 2012. It was valued by them. That's 12 years ago. Of course, it was valued by them at $600 million on their books. Then there was a collapse in the iron ore price, and there was a collapse also at the Santana port, which is part of the Amapa infrastructure. So Cadence bought it out of administration, working with the local government in Amapa. They bought the mine, also the railway, which is some well over 100 kilometers of railway to the port from the mine. That's been bought out of administration, and of course is up and running, and we're now at the point where, in terms of bringing a project back online, this is very much on a home run now. So the company announced on the 9th of July that they'd undertaken, undertaken an economic study in regard to the ongoing development of what they refer to as the green iron processing flow sheet at the Amapa project. So this is an existing infrastructure. If you've followed Cadence, you'll be very aware of a mapper. Lots of video clips, lots of information and pictures online of the actual mine itself, and then of course of the administration center at a mapper port. There's the local company Dev Mineração, which of course is the operating company in Brazil, and its operations there, and then of course the railway. So an updated economic study, the results were published on the 9th of July, and the valuation of a mapper as a whole was increased by 20% to give it a net present value of 1.14 billion, with profit after tax of 3.14 billion over the life of the mine. There was also a 6% decrease in cash costs at Santana Port, which was also very important. So again, we've got an increase in the valuation of the asset and a decrease in the actual costs to bring Santana Port back into operation. There's also the environmental licensing is on schedule, with the studies having now been completed, required reports being drafted, and these will be submitted in the current quarter, which of course is quarter three. The 67% green iron flow sheet testing has commenced. The results for that are expected in a couple of months, by the end of September. So everything is on schedule, very much as the company said it would be at the end of last year and the beginning of this year. So operationally, nothing has changed. Significantly, if this 67% green iron flow sheet is successful, it could increase net operating profit at full production from $227 million per annum to $324 million per annum. So that again is a huge jump. So this is further validation of the project, and I mean that potential uplift in projected annual net operating projects is huge also. So for Cadence, what does this mean? The company has now invested, since the end of March 2024, it's increased its total investment by $700,000 to $13.9 million, with Cadence now has an equity stake of 34.2%. So you would expect with that there'd be a chunky market capitalization. Now, based on yeah, exactly, based on a report from Edison Research back in April this year, and this of course is pre this week's announcement. So I expect that Cadence will have commissioned Edison to rewrite this report, and these numbers obviously have yet to reach Edison, but pre the PFS, the NPV upgrade this week, Edison announced in April that they had a base case valuation for Cadence's stake at 33.6%, not the 34%, to $52 million. So that's great. In addition to that, the valuation of Cadence's other non-public assets, which of course are that's the stake in Evergreen Lithium in Australia, where it has a lock-in. It also has an investment in the Sonora Lithium project, and it has a stake in European Metals Holdings. Of course, that's the Sinovac Lithium project. So with this package of assets, you would expect a market capitalization, somewhere in the 30 sort of 40 million mark, or as Edison indeed have a valuation of 27.6p per share. But here we are now. The company has just had to raise money at 2.5p because the shares have been trading around 3.5p. Now, this is market conditions for you. The company has that valuation, got that inherent valuation, but the market doesn't value it at that, because with a project like a mapper, it takes so long to come to fruition. And we're seeing this with other companies too. We're seeing this with Blanquer Resources with their Orem Cross Graphite project and others. The valuation that's locked into that project obviously can really only be triggered when you get to the end of that cycle, when the definitive feasibility study is complete and we then roll into production. So we're still some way off from that, but I think that Cadence offers fantastic value at the moment, and a lot of shareholders that have been with the company for some time might be unhappy about the current state of affairs, but the fact is the company, when the shares closed out the week at 2.7p, gave it a market capitalization of 5.48 million. So there's a huge disparity there. Now, no matter what you say, at some point that valuation gap is going to close, and that valuation that's locked into a mapper will actually start to manifest itself in terms of the market capitalization. And of course, when the company does recommence production, when it does start shipping the ore that's produced, or the green iron ore that's produced, then it'll be a major player in the world. Now Cadence is an investor, so it has a 34% stake. It's not going to be the operator at the end of it, but it will still hold that stake, and it may continue to hold it once it goes back into production. But regardless, this is one hugely undervalued company, and at 2.7p, I don't think there's ever been a better opportunity to invest into a project that's there, the infrastructure's there, and it's simply a case of jumping over the final hoops, which are all on schedule to bring the mine back into production.
Do you think at least a few of those hoops/hurdles need to be jumped before it, to de-risk it a bit more, before investors might see the value there? Is there some sort of overhanging risk or fear, do you think, about investing? I mean, yeah, I don't know. I mean, you look at sort of Premier African Minerals, and how that share price has come off massively. It's sentiment driven, isn't it? I think really, it's the belief. I don't know, because they've got this huge plant, it's all there, but it's just maybe the belief is not quite there yet. Do you think it's a similar thing with Cadence? It's not quite believed at the moment.
But the difference is with Premier, it's got a much higher market capitalization, of course, hasn't it? So yeah. So I mean, the note from Edison says, quote unquote, valuation still does not make sense. We've reduced our valuation slightly to 27.6p per share. They've now removed Cadence's stake in Hastings Technology Metals. Of course, that was the Yangibana Rare Earths project. That's now sold. But it's got those remaining stakes that I covered. Of course, Evergreen Lithium, that's a lock-in. It's got the Sonora Lithium project, and it's hard to attribute a value there because, of course, there's the ongoing issue with the Mexican government, which Clifford Chance have been employed to work with the government to resolve that. And then, of course, you've got the stake in European Metals Holdings, and that's the Sinovac Lithium project. So there's a stake there, but it's all about a mapper, and there is a huge valuation there. But Cadence laid out a series of milestones last year in terms of licensing, in terms of completion of studies, and it's hit all those milestones, and it's going to hit further milestones. It's on schedule to hit those. So every milestone that's hit is a de-risk. It's a de-risk. So the risk in this asset now is reducing rapidly. I will say at this point, I am a long-standing shareholder in Cadence, and I have taken opportunities as the price has come down to dip in and pick up, but you ain't going to get a better chance than this at 2.7p. I mean, it really is laughably undervalued. You've got a valuation of 5.48p, and Edison have got a sum of the parts valuation of 27.6p. It's going to reset or re-rate at some point.
Okay, well, thank you, Alan. Yes, I mean, the Edison valuation, they're saying market cap does not make sense. That's a great line. So let's see. Hopefully that does start to make sense a bit more in the future. We'll have to wait and see, won't we, on that, I guess. But moving on, ECR Minerals then, they're developing, they've been having quite a bit of news recently in the last couple of weeks.
It's been a great story, ECR, and of course it all changed. Well, we are getting on for a year ago, of course, when Nick Tulloch came in as into the company with Mike Whitlow. Nick, of course, is now chairman. He's taken over from David Tang. Mike Whitlow he's the driving force behind getting things done. Of course, you've got Adam Jones, the geologist there on the ground, and there's been a lot of great social media coming out of the company in terms of reporting progress. But there's a plethora of projects, and again, we're looking at the ECR valuation, a very similar valuation to Cadence, funny enough, 5.6 million, and that's trading at 31p, and yet we have some long-standing assets in the Victoria area. We have the Cressie project, which has yielded some terrific gold grades from Cuboid Hill recently. They were of course reported. The company announced the other week, of course, it had discovered antimony at Baillieston, and the company took 44 samples from previous diamond drilling that had taken place there and submitted for testing. They had 0.3 meters grading at 32%, not 0.32, 32% antimony. And that's right up there with some of the very best antimony finds in the world. So that's going to make a lot of people sit up and take notice. And of course, just down the road from Baillieston, you've got Southern Cross Gold with their Sunday Creek project, where they've discovered some great gold seams under the ground. There's a lot of discussion taking place with other companies, as we know, as Mike and Nick have intimated, and I'm pretty confident that we're going to see some sort of developments in that area before too long. And of course, antimony is classed as a critical mineral by the Australian government and many other major economies. Record high prices at the moment, some $18,000 per ton for antimony trioxide. So it's a hugely significant development in Baillieston. And then of course we have look in the background. So in Victoria, we also have the Tambo project. I'm going to come to that in a second. We then have projects up in Queensland. Of course, we have the Blue Mountain project where some trenching work has been underway, and there have been some the company has just applied to renew the license there for another 5 years. We then have the Lulworth project where Adam Jones, as we speak, is on the ground there with the field team. They basically revisited areas to the north of Lulworth, which are prime for both gold and also niobium as well, the rare earth element. And then, of course, they have the Conda Paringa license, which they have yet to go back to, and that was close to what was referred to previously as the Hurricane project. The terms that were being offered on Hurricane were unfavourable, but the team ECR managed to secure a license area adjacent to Hurricane, of course, Conda Paringa. So there's that to come too. But on top of all that, ECR's operating company in Australia is Mercator Gold. And with Mercator, there are a series of historical tax losses. And of course, these have been the subject of much speculation, but that speculation really was put to bed at the start of the month when the company announced that it had appointed Argonaut, an Australian company, to realise value from the potential, $75 million of tax losses that were carried by certain of Mercator's Victoria assets. So Argonaut's an Australian investment banking corporate advisory company based in Perth and Sydney, and it has now been appointed to seek a potential sale and an offloading of those tax assets. What the company will come back with, who knows? You've got a potential valuation of $75 million. Whether it will come back with 40, 30, 20, who knows? But what is fairly certain at this point is it's going to be a substantial number. So when you look at that number and you look at the current market capitalization, I mean, we said Cadence is due a massive re-rating. I think the same case applies to ECR here, but in terms of evolving as a business, I think ECR has many more options at its disposal in regard to being able to evolve and grow. So we have the tax losses. That's being worked through at the moment. So we will no doubt have some further news to come on that. The company also provided an exploration update on its work at Blue Mountain. It's produced 9 bulk concentrate samples from the trenching work, and if you follow ECR on Twitter, you will have seen the videos that Adam Jones and the team were sending back from the site. So application has been submitted there to extend that license for another year. That's of course an alluvial gold project, and the previous owners, Blue Kebble, believe there was up to 100,000 ounces of gold. There could well be more. So of course Adam and the team are working hard to establish that case. I said earlier, of course, Adam is now up at Lulworth. They're at Gorge Creek West, up in the north of the Lulworth project area, to chase down these niobium and gold prospects. So there was that update. Then a few days ago, we heard from the Tambo project, where the team had been operating early this year. Tambo, of course, is in the east of Victoria. So if you look at the map, you look at Baillieston. To the south of Baillieston, you've got the Sunday Creek project owned by Southern Cross Gold. Then to the southeast of there, you've got Tambo. Tambo, you've got the historic Duke of Cornwall mine based at Swifts Creek. And the company has discovered that using a technique called photon assay, which is a quick, easy to use system whereby photon analysis confirms and delivers a grading or a reading for gold. The company undertook fire assays of 37 rock chips at the Duke of Cornwall. Photon analysis initially indicated 51.5 grams per ton. Fire assay confirmed 52.2 grams per ton from the best results. Further 19 rock chips included grades 9.7 grams per ton, 8.5 grams per ton, 5.3 grams per ton, all of which fell within this 95% confidence level. So what it means is, rather than wait for the fire assay results to come through, which is it's an exhaustive process and it takes time to get that through the system. It means that using this photon assay, the company can take large samples, typically 400 to 650 grams. It doesn't require any preparation to speak of, but the photon analysis can be run across it. The results that come back are so accurate that they are within 95% of the fire assay results. So it does mean that when you've got multiple projects like ECR, you can use this photon analysis to quickly establish where the best grades are and plan your drill route from there. So what the net result is, photon analysis for ECR is going to speed the process up. And I think, with any exploration company, the clock is always ticking because the company doesn't generate cash from its projects, so it has to raise money. But as we know, ECR is fully funded for this year. The photon analysis process is now going to speed that up. So we're looking forward to some further results and obviously what the team find at Lulworth in the coming weeks.
Oops. Good. Thank you, Alan. Yes, that was a good summary of what's going on there. Certainly, yeah, a new fresh lease of life with ECR and the new management team there. So thank you for that. So let's finish off. And we're finishing off with a helium play, Helix Exploration.
Well, this company has blazed a trail, hasn't it? So since its IPO, and of course came to market back in April this year. IPO at 10p per share on the 9th of April. currently trading at 26p per share with a market capitalization of 32 million sterling. So I just use that to draw a comparison to ECR, 5.6 million market cap, Cadence Minerals, 5.4 million. I mean, you've heard the investment case for both companies, and yet Helix Exploration are capitalized at many times that of ECR and Cadence. So there's a disparity there, and I think it's a bit of a head scratcher. Also interesting with helium, because it's very much the exploration element of the moment. Of course, Nick Tulloch, the chairman of ECR, also the chief executive of Voyager Life. They, of course, have a general meeting Thursday next week, and at that meeting, the shareholders will approve the reversal of M3 helium into the company. So the CVD assets will be sold off, and Voyager will essentially become a helium company. So I imagine the name will change to M3 Helium or something similar. But helium exploration is very much the thing at the moment. Of course, helium gas, it's a disappearing element, as Bo Sears, the chief executive of Helix, said in his book. It's a really important element. It has multiple applications, both both in terms of space exploration, defense, medical, and there is a shortage around the world. So back to Helix. So Helix IPO, as I say, at 10p, currently trading 26p with a market cap of 32 million. It raised 7.5 million to fund helium exploration development in Montana in northern USA, and there seems to be a lot of helium assets around here. So something referred to as the Montana Helium Fairway. It covers a huge amount of territory and extends from Saskatchewan in the central Canada all the way down to Wyoming, and it's host to helium production from several companies, including North American Helium and the Wheel Group. Helix itself owns 52 leases over what's referred to as the Ingomar Dome project, which has characteristics of what's referred to in geological terms as a potentially massive flathead helium discovery. So there's a large tract there, estimated to be some 16,500 acres mapped at surface, and it's adjacent to a conduit called the Sumatra thrust anomaly. It's a geological conduit, and this is a conduit that basically is directing what's referred to as helium migration. It's directing the helium migration in a certain direction into the dome. Helix has multiple targets across the Ingomar Dome, including the Amsden Formation, the Charles Formation, Flathead Formation, Precambrian. But all of these targets are together. So the company has worked out a system that they can actually test each formation target via a single appraisal well. It's estimated at P50, which of course is the industry terminology. That's a P50 unrisked helium reserve of 2.3 billion cubic feet, potential upside of 6.7 billion cubic feet, and it's going to cost once in place some $12.5 to $15 million to build a modular processing plant. So since IPO, Helix have been hard at it. I mentioned, of course, Bo Sears, but Bo Sears is the chief executive, 25 years of experience in helium exploration. He discovered the Mancoda project in Canada, and also wrote a book in 2015 called Helium, the Disappearing Element, which I think I mentioned. Chairman David Minchin, he's a geologist and corporate finance expert. Also was formerly chief executive and managed funds at Helium One, so highly experienced in the field also. Just after the IPO, the company announced a partnership with petroleum consultants back in back in April. Petroleum consultants based in Montana, and they also put together a drilling contract with Treasure State Drilling to provide the Cardwell rig, which Bo Sears and his team have used twice before to undertake this drill work at Ingomar. Now, with this comes a drill manager that Bo has also worked before, Will Stenger, and again, in this industry, when you're undertaking such a task, it's essential to be able to know and trust the people around you. And Will Stenger has over 30 years experience in the industry. Bo Sears has used him twice before in his previous work with the Mancoda project and others. So this is a team that know what they're doing, and they have all the experience necessary to execute on the program. We then had an announcement in June, the scoping study, came back from the dome, and then a net present value of just over $300 million, which was basically 550 million cubic feet at 1.5%. But also at the same time, there was a sea change in the company that really drove value in the business, and I think captured the imagination of a lot of investors. The company also acquired the Rudyard project, which is close by, from a consultant to the company called Adam Standiford. It paid $250,000 in cash and shares for a consultancy fee. Here they have already identified helium. Helium has flowed to the surface from 2 wells adjacent to Rudyard. So what Bradford now brings to Helix, as opposed to Helix being an exploration company at the outset, it's now potentially a helium production company. And David Minchin said at the time, what this does, it significantly de-risks the Helix portfolio because it provides a direct pathway to commercial production. And the fact that they were able to purchase for just 230,000 in shares and cash, David Minchin said, as a testament to Bo's experience, that the acquisition is so cheap. So the company is now, with the funding it raised at IPOs, it's fully funded to complete these 2 wells. The second well, of course, will now be drilled at Rudyard, where external flow testing will convert the contingent resources there. That's based on 550 million cubic feet. It will convert those contingent resources into reserves. An investment note was written on the company by Oak Securities, who said the acquisition was immediately value accretive, valued Rudyard alone on a standalone basis at $85 million, with a gross valuation overall of 145 million, which equates to 93p. If you take it as an unrisked valuation, that could be 187p, and here we are still at 26p. So the company has made incredible headway really since coming to market. You've now got the Rudyard acquisition, which provides the production balance to the portfolio, but you've still got the blue sky potential of the targets, the Amsden Formation, Charles Formation, Flathead Formation, and Precambrian at the Ingomar Dome project. That's your blue sky. And the company still has plenty of cash. It's preserved its cash resources to focus on development and drilling. And we await news from the company in terms of next steps.
Good stuff. I think, as you say, that Rudyard is the basis, really, of that research note, isn't it, by Oak Securities there, that really is the value add to the overall project here, with Ingomar being, as you say, the blue sky. But seeing what they've got in reserves at the Rudyard project, and fairly swiftly they're hoping to get that actually producing. So I think that was a great acquisition from them, and it transforms the company.
It does. I mean, it's absolutely transformative, and I mean, it's as David Minchin says, a testament to Bo Sears that they're able to get to bring in an asset that is already producing. That they've already had helium flowing to the surface from 2 wells adjacent to Rudyard. So this is pretty much a plug and play. So once that well is drilled and it's producing, I think shareholders are going to be rewarded with a further jump. Certainly, looking at that valuation that Jerry Keane from Oak Securities has put together, gross valuation of $145 million. So that's just based on the risk valuation at present, which is 93p, unrisked valuation of $291 million, which is 187 pence. So it's there's all to play for and everything to come.
Indeed. Well, thank you very much, Alan, for your time as always. Do have a pleasant weekend, and we'll catch up next week.
Thank you, Mark, and have a great weekend too.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.